Okay, so I'll go ahead and get started. Good morning, everyone. My name is Allison DeGuy, and I'm with the Illinois Restaurant Association. One moment, it looks like it froze. Okay, there we go. I'd like to thank you for joining today's business advising session, Unlocking Capital, How to Fund Your Business Growth. Today's session is being presented by the Illinois Restaurant Association in partnership with the Cook County Small Business Source. Established to ensure businesses emerge from COVID-19 intact and positioned for growth, the Small Business Source connects small business owners with expert guidance and support. Services include no-cost business advising, resources, and events that connect small business owners with a community of advisors. If you're interested in one of our advisors reaching out one-on-one for further business advising, sign up at cookcountysmallbiz.org. It's free and easy to sign up. We encourage you to ask questions. We'll have a Q&A session at the end of the presentation, but we'll also be asking questions throughout, so go ahead and drop your questions in the chat. You can also come off of mute and if you'd like to ask them personally. We also have a team from the IRI here today to assist with further questions. At this time, I'd like to introduce our panelists, Matthew Revere, Vice President, Pursuit. Matthew, please take it away.
Great. Thank you so much for that intro. Welcome, everyone. Thank you so much for being here today. I truly appreciate your time. Sorry, let me just load my slide real quick. All right. Everyone can see we're good to go? Cool. Well, thanks again, everyone. It's a pleasure to be here. My name is Matthew Revere. I am part of Pursuit Lending here in Chicago. I'm Chicago based. I, in fact, woke up early this morning to watch some of the Cubs game. However, after seeing the score, I probably should have gone back to bed. I have over 15 years of experience in this field, and I'm really happy to be here to talk a little bit about your access to capital and how to meet your capital needs as a small business owner. Pursuit, we are a community-focused lender that really we're focused on the borrower success. We have over 65 years of history of offering innovative lending solutions to help your businesses. And we are a nonprofit CDFI funder, which we will talk a little bit about this program. However, we're not here to talk about us, we're talking about capital and how to get the capital you need for your business. So some of the things we'll cover today. One will be the different types of lenders that are available to you. The second will be determining the right loan for your needs. The third is what questions you should be asking, both you yourself as a business owner, but also as you reach lenders, what questions you should be asking lenders. The fourth, what lenders should be looking for in a strong application. And the fifth is what information you need to apply. All right. So let's get going. First thing I would like to talk about is a capital continuum. As your business grows, your lending needs also grow with that. You know, a lot of you may be a new business right now, and it might be a little bit tough to get those bank loans. Banks are always a great place. I always say if you are looking for capital, the first place you should reach out to is a bank. They have the best rates, and they are very regulated and a great place in the market for that. However, as we might know, conventional banks are sometimes the ones that have the most stringent of requirements when you are looking for those capital requirements. So when you are starting out, you look for sources of income. It might be your friends or family, or maybe you have a little sweat equity, or you might even have to use a little bit of your personal savings. One of the things that you can go from there, and the alternative community lending space can help with new businesses or some of those growing businesses. And so today we'll talk a lot about the alternative community lenders and institutional lenders there for you. These will be the small business administration lenders, the CDFIs, some of the credit unions, and things of this nature. So let's get into it. All right, so alternative lending. Again, you started your business or you're thinking about starting your business and you went to a bank, and unfortunately, due to their underwriting criteria, you may not be eligible for a loan. Where do you turn now? Well, this is why the alternative lending space exists, because you still have this capital need to grow your business and you're still going to be looking for that capital. And however, you may not be bank eligible. So again, Banks are a great source of funding for businesses with that proven track record or profitability and collateral. However, new and growing businesses are often unable to qualify for those conventional small business funding. And so, really, in the alternative forms of funding available to you, these are just three of the options that we'll go in depth with. One is an SBA loan, one is a community development financial institution or a CDFI loan. And then finally, the one that I'm sure many of you have been marketed before is a fintech or an online lender for you. So first, let's talk a little bit about the SBA loans, the Small Business Administration of the United States. So the SBA does not provide loans directly. I always say that this is almost like a car dealership where all the car dealerships are selling Jeeps. However, you can't buy a car directly from Jeep. So SBA partners with organizations to do the loans that are backed by the federal government. This allows them to take on a little bit more risk with the loans. So what the SBA does with these loans is they partner with a bank or other lenders to offer that guaranteed business loan who might not qualify for that bank lending. There are SBA loans available for every phase of business. So if you are a startup business and you're looking for that capital, there is an SBA program, as well as if you're an established business and you're looking to purchase the building that your business is in, that was also SBA loans for that purpose as well. One of the downsides with the SBA is that because you are getting that government guarantee, the application process is more detailed than a quick access or an online lending program. So if you are looking for an SBA loan, there will be more documentation and it won't be the quickest of processes. So just to keep that in mind while you are planning it. One of the loans that the SBA offers is microloans. These are loans to small businesses and startups, and it goes up to 50,000. These are usually offered by nonprofit SBA partners, of which there are so many great institutions here in Chicago that do the SBA microloans, and they use the less restrictive lending criteria more than the traditional bankers. And just a quick guides about this is that the maximum repayment terms of these are about 6 years. These interest rates are fixed. They're currently about 9%. Just to level set, we are in a high interest rate environment at the moment. And again, a conventional mortgage right now is about 7%. So that's just kind of where we are in terms of rates. And these can be used for any business need, whether it's working capital, or you're looking to purchase a machinery or anything of that nature. And then finally, with these loans, it includes access to technical assistance. Now, technical assistance doesn't mean just assistance with anything technology based. This can be anything if you might need help with bookkeeping or marketing or anything of that nature. These loans, they want to match the capital with the education to help you grow your business and move it forward. The next option is the community development financial institutions, which sometimes do the SBA loans. So the CDFIs are private financial institutions that operate with the primary mission of serving low-income communities. That doesn't mean that's all we serve, but these are mission-driven organizations to make sure that capital is provided to small business owners that traditionally wouldn't qualify for capital. These are backed by the U.S. Department of Treasury, the CDFI fund, and overall there are over 1,200 CDFI organizations in the 50 states. And again, we have generally less strict eligibility than the traditional lenders. And so these are, if you are looking for the alternative lending because you may not be bank qualified, there's a great CDFI locator here. And at the end of the presentation, I could talk a little bit of them here in the Chicagoland area. So what do we do? What's a CDFI do? We offer resources, mentorship, and education to help businesses improve their financial health. We provide fair, transparent financing and financial education to the small business owners. We lend to every phase of small business from startup to being in the growth phase. And our loan products range from financing for working capital to fixed asset purchases. There are also many lending programs within our umbrella. Some of them are state sponsored and some of them are local. That might be able to help your specific need for your business. Finally, the one that you're probably going to see a lot as a small business owner, in fact, you're marketed to a lot, is the online lenders. So these are the ones that when you type Google small business loan, immediately these ones pop up. The benefits of them is a streamlined application process. They usually ask minimal to no documentation, very quick approval times, usually within 48 hours, very fast funding. You get the capital right away, and very flexible approval requirements. Um, Now, with that, the disadvantages, the likelihood of higher fees, interest rates, and aggressive repayment terms. In this space, we'll talk a little bit about this next slide, but there are little to no federal regulations when it comes to business borrowing. And so just when you are looking at these lenders, be very, very cognizant and aware of fees. And we'll talk a little bit about this. But again, with online lenders, these rates can go up to 80%, and the terms can be as short as 6 months. And so just to focus a little bit on that, make sure you can do that. Again, the risk of predatory lenders of online lenders is prevalent. And with that, there's no relationship with your lender. So they don't know your business and they don't grow with your business needs over time. It's very transactional. How to recognize predatory lenders. Again, if there's anything you take away from this presentation, please be, when you are looking in the alternative lending space, be very cognizant of the predatory lender and their practices. So these are just some of the things that might be warning signs. One is that you're receiving unsolicited loan offers. I'm sure you're getting mailers about this, you're getting phone calls. They're very aggressive in their marketing ways. And so just be very aware of that. The second is that you're pressured to make a quick decision. Take your time. This is capital. This is a very important thing. This is the lifeblood of your business. Take time to read the terms, read the conditions, and understand. If someone's pressuring you to sign on the dotted line to take the loan right now, they might be up to mischievous things. The third is that you can't compare loans because the APR is not shown. Annual percentage rate. So one of the practices that these lenders do is say, we don't have an interest rate. What we do is have fees. What they don't tell you is those fees, when they bake into the loan, can be upwards of 80%. And so when you're working with a reputable lender, if you ask for the APR, they will be able to provide it right away. So you can have that apples to apples comparison on your loans. The repayment terms are aggressive. And, I would say on average with a predatory lender, if you're borrowing $100,000, they will make that a 10-month term and they do daily debits. So just make sure that you understand that the terms of the loan and how long it can be. And then there's obstacles to paying off the loan. Majority of reputable lenders, you can pay off the loan early and you're not charging interest on that. So let's say you have a good month and you want to pay it off right away, you'll save on the interest. However, with some predatory lenders, they do not allow the early payoff of loans. And their goal is to get you trapped in a debt cycle. You borrow once, and then you have to borrow another loan to prepay the other loan and another loan to repay the other loan. And all of a sudden, your cash flow is a very bad situation. So again, when you are looking in the alternative lending space, please just take your time, ask for the APR, understand all the fees associated with the loans. Okay, so now you're ready to go and get ready to approach a lender. So just a few questions you want to be asking is, what's the financial need and does it make sense? How much is it going to cost you at the end of the day with the interest? And how much as the borrower are you willing to contribute with the loan product? So the first is thinking about the
Oh,
typical.
Matthew, I think you cut
Sure.
out for a few seconds. If you wouldn't mind going back to this last slide,
Oh,
uh,
yeah, sure.
and just talking about I think it was on your last bullet point.
Okay, great. Thank you for that. How much are you willing to contribute as a borrower? Sometimes if you are a startup, sometimes if you are a startup, they will ask for a 10% contribution and others may not. So that's just something to be aware of. So the typical purpose, let's say you're looking for inventory, receivables, or you are looking for that working capital, you may want to explore a line of credit. A line of credit basically works as a credit card, only with a little bit better interest rates. And with this, you can pull out the capital as you need it and then pay it back as you go. So this is made for very flexible capital, thinking about money coming and going. Now, let's say you have equipment expansion or improvements. This is where you have that one solid ask that you're making. This is where maybe a term loan makes sense, where you have to buy a new pizza oven. It's going to cost you $100,000. With this, the term will be 5 to 15 years and it's a fixed price. So sometimes that term loan makes sense for that one hard ask. Finally, let's say your business is taking off and you're ready to buy the building. There are loans that do mortgages or what we call a 504 loan. These are commercial real estate loans, and these operate a lot like a conventional personal mortgage, where the rate is 10 to 25 years and the amortization is there. So again, understanding the loan product and matching that with the typical purpose. All right. So, what as a lender, what do I look at? Well, the first is going to be your business. And what is the history of your business? Are you brand new or have you been in business 10 years? And what's your track record there? Then, finally, what are the strengths and weaknesses of your business? Every business has strengths and weaknesses. And so, just understanding that landscape a little bit. And then finally, think about, are you profitable right now? Or are you a startup and you're forecasting profits in the future? And what the capital ask will be then. The next one is reason for borrowing. How much money is needed and why? That question right there, as a borrower, you should be thinking about. When people come to me and ask, well, how much can I borrow? That's not a good way to start because that shows me as a lender, you haven't thought about what you need and specifically for why. Instead, if you're saying, I need $50,000 for working capital, I need $80,000 for a piece of equipment, to me, that shows you know exactly what you're borrowing and you're not over borrowing and you understand what the capital need is of your business. And does the borrowing make sense? Does the reason why you're borrowing it make sense for you? The next is personal credit. Majority of lenders, if not all, do look at your personal credit to see what the track record is there and seeing what your personal credit score is. Now, in the alternative lending space, we do go lower than traditional banks. And there are some lenders here in Chicago that the credit score may not matter, but they just look at your credit use and credit history. And then is there any red flags? Again, are you taking out loans and not repaying them? And just making sure that there is the responsibility around that. Then finally, the biggest one is the debt coverage ratio. This is how they determine what loan size to give you. After you pay all your expenses and all your staff and what's the cash flow left over? And they want to make sure that the cash flow left over can cover the cost of the loan, your new monthly payments for the loan. All right. When borrowing, there are what we call the C's. So the first is character, which we talk about as a credit, what we looked at. The second is capital and commitment. So sometimes, again, if you're a startup, they may ask capital injection from the client to make sure you have what we call skin in the game. So there is that buy-in of the company in a capital way for you and your small business. The third is cash flow, where we talk a little bit again, where we want to make sure that the cash is there. So we're not overburdening you with this new loan payment. Capacity is regarding time. And do you have the capacity to pay it back? Then we have collateral. Collateral is when we can think of a car loan. And so if you don't pay the loan back, there's something that is clawed back from the lender. Not all lenders require collateral. However, sometimes it is used to strengthen the loan. Then finally, it's conditions. Sometimes there are conditions based upon the capital where we may ask things of you as a small business owner, whether it's you provide quarterly interim financials or things of that nature. That's when we're looking at closing the loan. All right. So questions that you should be asking a lender. You want to ask what the interest rate is. You want to understand the application fee because sometimes there is a fee to apply. Is there a closing fee? And really, or the origination fee, understanding all the fees associated with this loan. The second is the repayment terms. The understanding, am I being billed monthly? Is it daily? Is there any, can I pay it off early and save on the interest? Again, be wary of lenders who do not provide you with an APR, so you cannot do a loan cost comparison. Make sure you ask every single question about fees or the interest rate possible. Additional questions. Is there a personal guarantee? A personal guarantee means that you'll be using your personal credit for this loan and will be reporting on your personal credit report. Pledge collateral. Is there collateral that you ask for, or is there any I can give to strengthen the loan? Prepayment penalties. Can I pay this off early without any penalty? And then loan documentation. What are all the documents that might be needed for me to do this? Is it just, a few bank statements, or do I need tax returns? All right, so now we're going to talk a little bit about the financial projections. And not all businesses might have this, but these are things that you want to think about when you are applying for a loan to understand the capital, where it's going in your business. The first is understanding your budget and your key assumptions and what you're looking for in the future. So this is looking future about budgeting in the future. A profit and loss statement. This is kind of looking backwards. A profit and loss statement is just one really big bank statement that shows all the money that came in and where it all went out. So it's telling the capital story of your business and where the capital is coming in and going out. The cash flow. This will show basically where your cash flow is coming in on a monthly basis. A lot of times your business might be seasonal. And so do you have stronger cash flow months than others? And what's the story of the actual cash on hand and where it's moving? Then finally, a balance sheet where we'll take a look at all the assets and liabilities that the company has. Now, as a small business owner, you may not have all these documents, and that's okay. There's a lot of great resources here in Chicago that can help you build these or help you show how to build these and move forward. But I will say, if you are looking for a capital ask, they will be asking for a profit and loss statement, most likely. All right, and then again, you want to just summarize your capital need, understanding the uses and sources of it. So you have your startup costs, possibly your working capital, maybe you need a piece of equipment, and there's leasehold improvements. So you're looking that you might need for your business $100,000. Okay, well, where are we going to get this $100,000? And this is where you kind of want to show it. Well, you're going to put 20% in yourself to show you have that skin in the game, which is great. And then you're looking to borrow the long-term capital, which the 55,000, because it's going to be for more of those fixed costs, the equipment and leasehold improvements. And then you might also have a working capital loan of 25,000. Again, it's telling the story of the capital in your business and making sure every dollar has a use, that we're not all over or under borrowing. We know exactly what this capital will be used for. Documents that you'll need to apply. Business plan, not every lender asks for a business plan. However, for you, it's always good to have. And there's some great organizations that can help you build one of these because it gives you a roadmap. and it's able to tell your story for it. If you are a startup, this absolutely will be required. If you're existing business, we do ask for the executive summary just to tell us a little bit about you and your business. But again, it's good to have because it tells a story. We're going to ask for a little bit detailed info on the borrowing needs, get that story. Business tax returns, startups, you'll have asked for 2 years of projections, but be prepared to give 3 years of personal or business tax returns. This is something that they want to see the longevity and what the business looks at. Again, not all of them may ask for it, but just be ready to have them on hand. Interim business financials, that's what we call the profit and loss. So let's say we're in October of this month, October of this year, and the profit and loss will tell us the story of what's been happening in the business since January to October to give us kind of a look at what the 2025 financials look like. We want to know all other debts that you might have. Again, we want to make sure that you're not overburdening yourself with the cash flow there. And that personal financial statement, just understanding all the debt available to you. Now, not every borrower asks for this, but I always say that lending needs come up sometimes in a very quick way, whether it's an air conditioner breaks or a freezer that breaks. And in those situations, you don't want to be running and scrambling and asking your accountant for the documents. I always say, have these documents, put them in a folder, put that folder away. When you that way, when you are in that situation, you can pull it out, you're ready to go, and you're not running around trying to find everything. Personal history and credit score. Again, a lot of businesses believe that their personal credit may not be looked at. However, the majority of lenders will be looking at it. Just some red flags are tax liens. However, if you are on a payment plan, that's usually okay for some lenders. Are you paying your bills on time? Is there any open judgments, or is there any bankruptcy of that nature? Again, in the alternative lending space, banks usually look for I would say 670 and above. Some might be a little bit more stricter that way. And in the alternative lending space, credit isn't as important, but we are going to take a look and we're going to see what's happening there. And so you want to make sure that your credit history is up to date. And if it's not, what we can do to get you there. Finally, when people ask me, well, how do you pick the amount that you approve as a lender? Well, this is very quickly, and I know that this has a little bit of detail in it, and we won't go too much into it, but really we're looking at cash flow. We want to see the profit before your taxes, and then we're going to back in any depreciation that the business has, whether it's wear and tear on your equipment. We're going to look at the amortization and then your interest payments. So that's how we calculate the total cash flow. Then we're going to look at the new debt. We're going to divide it by 12, your monthly debt payments. So we're going to look at what your monthly on the existing debt is and divide it by 12, and then your total monthly debt on the new debt and divide that by 12. So we want to just make sure that that cash flow is there. And this is the fun calculator that I know you don't need to know, but basically what we're looking at is your total cash flow for the year. Let's say it's $20,000. And then your total debt service with the new loan included would be $18,000. And that gives us a debt coverage ratio of 1.16. Majority of lenders, it's 1.10. Now, I know this is a lot of insider baseball for a lot of you. However, this is just a quick idea of how we determine the loans amount. And that's my presentation for now. And I know I wanted to leave a good amount of time here to answer any questions that you might have about alternative lending or lending in general for your small business.
Thank you so much, Matthew. If anyone has any questions, feel free to drop them in the chat. And as you can see, there's his contact information. So I know sometimes people are shy, but asking questions in a great.
Yeah, absolutely. And so underneath is my email, my cell phone, and my telephone. And I understand that capital can be a very personal thing, and I absolutely understand that. And if you ever want to chat one-on-one, about what your capital needs, feel free to reach out anytime at all. I enjoy, I've been doing this for 15 years. I really enjoy it. And I can get you the right resources you need.
Perfect. I don't see any questions. I think we'll go ahead, and we also will be sharing your contact information in the email we send following up. Oh, here we go. We
Great.
actually do have a question.
Sure.
What would be a minimum qualification to
Yeah.
apply for a loan? So credit score or revenue?
Yeah, that's a great question. So it depends what loan size you're asking for. There's some lenders here in Chicagoland area that do loans that just start at $2,000, and those have very little requirements. And then we have lenders that go up to $8 million. And so traditionally, what we ask is if you're asking for a larger loan amount, there's going to be more due diligence. But in terms of credit score, it depends the ask. And it depends what you're looking for. So, for instance, there's a great organization here in Chicago called Allies for Community, where they go a little bit on the lower side of credit. And for us as a lender, we do our credit requirement is like 630. So again, it's not, and in terms of revenue sizes, it depends upon the loan amount you're asking for. So if you're a business and you make $10,000 a year and you're asking for $1 million loan, it doesn't match that cash flow that we're looking for. However, so what you really want to be looking at is the revenue your business is, and if that makes sense for it. Is debt wise, is it wise to use a loan to pay? Sorry, I saw a question. Is it wise to use a loan to pay off debt? Maybe. And you want to ask yourself, are you just in a cycle of debt right now where you're just borrowing to cover a loan to borrow more? That's probably a bad case. A good case is, let's say you unfortunately received an online predatory loan and they're charging you 75% and you need to pay it off in 10 months. Well, yeah, that's going to cripple your business. Now, that's a great time where you can refinance that loan and get, maybe an interest rate of 9% over a 6-year term. So that would be a positive reason to pay off a loan. So understanding that how much you might be saving on interest, that would be a positive reason to borrow additionally to cover a loan.
Someone else asked, what are the common reasons why a loan is declined in your organization?
Yeah, that's a great question. A lot of the times it's the cash flow. For us as a lender, it comes down to cash flow. So this is something we see where small business owners and accountants have to have that conversation, because a lot of times accountants see their goal is to limit your tax liability, right? They want to show you want to pay the least amount of taxes. And I get it. I don't like paying taxes. But and then they show at the end of the year a break even, or maybe you lost $50,000 a year. Now, one, the government, they're good at auditing. But two is when you come to a lender like ourselves and you show that last year you're losing money and the year before you lost money, you continuously are showing on your taxes you're losing money. And you say, well, I got 2 books. I'm saving some cash under it. And it's like, well, that's great, but that's what we have to go off of, are those tax returns. So those are when you looking to build your dream team. Make sure you have those questions from your accountant and understand that, you do want to show your business growing and reporting correctly in that capacity.
That makes sense. And I think that's a great way to end. So thank you everyone for coming, and thank you Matthew Revere from Pursuit for the informative presentation. I'd like to also thank the Cook County Small Business Source for their continued support. And then, as I mentioned earlier, after the conclusion of this webinar, attendees will receive a copy of the presentation, or excuse me, an email with links to the presentation, as well as Matthew's contact information. So if you have more questions, you can reach out to him that way. Thank you everyone who attended. Thank you again, Matthew, and have a great day.
Thank you, everyone. I appreciate your time today.